Hey guys, I've undergone some office renovations over the weekend. New desk, new chair, bunch of other things that we're working on over here, new setup, and also a new office plant, or the first ever Steady Trader office plant. Anyway, there's a saying out there that we need to sell in May and go away in terms of the stock market. And I'll tell you that there's actually a decent amount of credibility to that statement. I do think the markets tend to get a little choppier, a little more boring in the summer. I don't think they tend to drop too much on average in the summer, but they kind of tend to flatline on average if you go back, 40 years of data. The other thing that you find if you look back at about 40 years of data is a lot of the seasonal stuff that I don't talk much about here in the vlog, but I talk about with my Clubhouse members, is in this case, you tend to actually see a pretty good tendency, actually a very good tendency, for the S&P 500 and thus the broader US stock market to lift or rally higher into the end of May and through sort of the first half, maybe even to the entire month of June. As we're now about a week and a half or so away from closing out the month of May, I thought I'd give you a little bit of perspective. So let's have a look at that.
So last week, the week that ended in May 19, 2017, we had quite a choppy week, but it was really just one day that kind of jinxed everything. And that was a sell-off midweek. What that means to me is that we have to kind of focus on what we call the weekly charts, where each one of these little bars is 1 week worth of price action. If we look at the weekly chart of the S&P 500, for example, you can see that we have this sort of long tail that resulted on last week's candle. It just basically represents the fact that we had a bounce off of the lows of last week. All else being equal, this to me continues to show that the bulls are in control of this market. It was literally a one-day sell-off on, I guess it was the Wednesday, the 17th or something like that of May. But other than that, the bulls remain in control. Now, that's the S&P 500. We can look at other parts of the market. We look at the financials, which have struggled for months now. They've really gone nowhere, and they continue holding up. Now, the financials, we're looking at the XLF, which represents the S&P 500 financial sector, or have been underperforming, but again, they're holding up. And if they're not breaking down, it does tell us that there's still an underlying bid in the market that we have to respect. We look at the consumer discretionary stocks. You can see these guys, even though they're pushing higher in what might be a somewhat troubling type of range, if I get rid of these two lines, you can see very simply here too, they closed well off of those lows from last week. Now, for me personally, I like to see more follow-through buying when I see this kind of these kind of weekly candles. I like to see us maybe get back to higher, third or quarter of last week's top end of the range. So in the S&P 500, for example, more specifically, that might mean that on the SPY ETF, which is a lot of times what people use as the go-to vehicle to trade, the S&P 500, I would like us to possibly get back above, say, 240 or 239 and change, or 239.80, 239.30, something like that, to then see if we can finally play a breakout. Because the market has remained in a very tight trading range that has made it very difficult to do a whole lot for most people, unless you're day trading and don't think day trading fits most people's reality of their jobs and time availability. But I think the S&P, if we can get back above, I'm gonna call it 239.70 or 239.80 or something around that area. If we get above there and we can close above there on a daily basis, then I think we could see that squeeze higher into the end of May and possibly even through June, right? But right now, what I'm trying to tell you is that I do think the odds here are pretty decent for a squeeze higher into the end of May, bearing any outside news that pushes the market right back lower. But I do think, anywhere from in the mid 239s, maybe high 239s, and then it's not unfeasible to get a squeeze on the S&P 100 back towards 245 or so. Again, the financials are important. They have to participate. I do think that the large cap tech, the NASDAQ 100, continues trending. So I would expect a continued participation by this sector. I don't know if they have to lead the market higher, but I would be surprised if they don't participate. And lastly, the transportation stocks, which have been underperforming for quite some time. Look at the IYT, which represents transportation stocks more broadly speaking, coming back into this red line, which is a 200-day moving average. I'm watching this very closely to see if they might be able to see something here that finally resembles more of a bullish reversal. And then finally, on a single stock basis, you know, I like to look at my proprietary Beat Reversal Indicator, which, by the way, guys, it is available for Thinkorswim, for TradeStation, and for NinjaTrader, and for eSignal if you are interested in using it. We got a buy signal on last Friday, I guess it was the 19th of May, in a stock called Starbucks. Might have heard of it, SBUX. And basically, we had exhaustion selling on Thursday, follow through buying on Friday, and it does look poised to potentially move into the mid 60s. So Beat Reversal Indicator is available for you there as well. You can go to steadytrade.com/products if you're available. But I do think there's quite an interesting opportunity here to trade the market higher for a squeeze through the end of May, and again, possibly even through the month of June.
Also, guys, I'll tell you that we just opened registration for our next mastermind workshop. It's going to take place in Boston, Massachusetts, June 11th through 12th. We're doing a bit of a different format this time. It's only going to be $197 for the early bird pricing instead of $797 that's usual pricing. So you may want to come and get that pretty quick before the price goes up. It's going to be a full 2-day of mentoring session. Really great stuff to get you to the next level of trading, finally get you profitable. We'll create a personalized trading plan for everyone that shows up. We'll talk about options trading, we'll talk about stock trading, we'll talk about near-term time frames, longer-term time frames. We'll talk about getting you into a rhythm so you can fit this into your current lifestyle. So go to thesteadytrader.com and click on the information page for the Boston workshop on top there. Again, it's just $197 for 2 days. We're gonna do this for early bird pricing right now, and then we'll have to raise the price soon after that. But that's what's going on here in Boston. Hope to see you guys there.